All right, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Monday, ladies and gentlemen, the 1st of September. Welcome to the first day of September, the first trading day of the week, of the new week. And also, yes, of course, officially the first day of fall or autumn. Depends on how you want to say it. But look, welcome everybody. Today the U.S. markets are closed, and I think this is a perfect opportunity to dig into the U.S. labor market without like any noise. So, look, before we jump into all that action, let's quickly have a read through our risk disclaimer. So, yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. So yes, like I said, yes, this week we have the U.S. job numbers. Last week was a busy one, especially Friday. The market was going crazy with all the tech sector. This week, yes, we have jobs, U.S. jobs. In addition to the U.S. jobs, we also have the Canadian jobs, Canadian job numbers. But look, about all this in a bit. First, also just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So let's have a look at the economic calendar. And the first kind of piece of information that's coming out will be on Wednesday. So normally we would get the JOLTs because that's what we're looking at. The JOLTs job openings. Normally they would be on Tuesday, but because Monday today is a public holiday in the US, so yes, we're getting that on Tuesday. Kind of everything gets shifted a little bit. So on Thursday we'll get the ADP, and on Friday we'll get the NFP. And actually, to be honest, I think that this kind of layout is great when we have like these job numbers coming out every day like that in a sequence, in a straight sequence. Now, anyway, job openings. Let's have a look at what's happening here. For now, look, the number is expected to come out at 7.4. This has changed a little bit because this morning I was looking at this one and it looked to be 7.5. Let me just double check one of the economic calendars. Another economic calendar, just to kind of double check if this is something. Yes, exactly. This is what I was looking at, 7.5 initially this morning, but now it changed to 7.4. Okay, interesting. We are seeing a little bit of a lower number. The number here, look at this. The figure has been declining. And since what? Since March of 2022, the number has been declining, and basically that is, yeah, it's a huge bummer in my opinion for the US market in general. This chart doesn't, it looks similar to the ADP and NFP. I'll show you in a bit. But yeah, let me just actually open it in dark mode here. Let me just see if this is gonna work out nicely. Let me just see if this is gonna work like this. Right, I think I need to save it or something like before opening. So let me just try to save it here. But again, let's have a look at once again. It's gonna open USJO. No, let's do it the another way around here. Let's just search for USJO. There we go. That's the easier way. Now look, this is what I'm talking about. So this, like I said, this has been a bit of a disappointment since yeah, the beginning of 2022. And looking at the structure here, if we would say we would apply technical analysis on this, we're looking at the EMAs here. Looking at the EMAs, we can see that we are approaching the 200-day EMA. We did have a brief drop below the 200-day EMA, and that was a critical moment. That was back in when COVID kind of kicked off, when the stock market was just collapsing heavily. Yeah, it was a brief moment below the 200-day EMA. Now what's happening, it seems like we're just gradually, it's not even like a shock or anything, it's just a gradual decline, which is a little bit worrying, to be honest. So that's what we're hoping, expecting to see right now, 7.4. Look, we'll see what the actual number comes out. Of course, if it's a higher number, then we could see the U.S. stock market just kind of enjoying the moment to the upside again. But I'll get to the charts in a bit. But let's quickly have a look what's happening with the ADP as well. Look, the ADP, the U.S. ADP employment change is expected to come out on the lower side. This was this morning. This was also forecasted a little bit higher, around 70 something K. Now it's 68. Everything seems to be dropping, and the market is not very positive about this. I mean, what the hell is happening here? Maybe now it will open up. Let's just double check. Yeah, there we go. Now it's opened up. Yeah, there we go. So the US ADP, look at this. Look at this. We are seeing, like I said, also since 2022, the beginning of, or actually mid 2022, the number continues to decline. And yes, this was a major drop back in COVID times when COVID struck. And this is, like I said, this is what we're seeing right now. Is just a gradual decline. Let's have a quick look at what's happening with the NFP, because that one is also expected to come out on the lower side a little bit. Yep. Oh, actually, no, 75 against 73. Right. This has not been revised yet. I mean, I'm seeing that the JOLTs and the ADP has been revised. Maybe not NFP will be revised at a later stage this week. But yeah, the problem here, what I'm saying, okay, it is expected to be on the higher side, but the fact is that the expectation is still low. And don't forget that this number here, the 74, this has been revised, and let me just double check very quickly here. So yes, in August when it came out as 73K, the forecast here, this is so previously the in August when we got the 73K, the previous figure before that in July was 147. But when the August number came out, oh sorry, when the July number came out in August, the revision for the July number became from 147 to 14K. And this is where we saw the firing of the Bureau of Labor and Statistics, the head of the Bureau in Labor and Statistics, and again, maybe it was a pretext. Again, maybe somebody wants to get their own people in all the major important institutions. Let's put it this way. So yeah, and either way, the revision was crazy. And now the question is for me, actually, are we not going to get this revision a major one as well? So are we not going to get the 73K revised to, like, I don't know, like a crazy 15 or 10s or maybe negative numbers? So like I said, let's not rush into things yet. Again, the numbers right now, or have been lately, crazy, and it's not maybe the actual number that's more important. Is the revised previous figure. That's what's currently interesting, and I think that this is what the Fed will be keeping a close eye on, because so far the labor market, look, we have unemployment, U.S. unemployment kind of expected to come out at 4.3. Canada's is also expected to take up a little bit higher here, but the U.S. unemployment is expected to tick up by 0.1% to the upside. Again, let's quickly launch the chart. So you can see that, yes, it's a gradual tilt from the lows that we saw here back in January of 2023. I mean, we were around 3.4%. That was very low. Now we're, like I said, we're gradually pushing higher. And again, if I do apply technical analysis on this, I mean, we're, testing this 50-day EMA. So in a way, it could break easily and we could go towards slightly higher levels. But look, let's not rush into things. And of course, we don't apply technical analysis on this. We go with what we get from the bureau, the BLS, and of course the another institution that will be monitoring the numbers here very carefully, these job numbers, it will be the Fed, because we know that the Fed is expected to cut rates in September, going into September, and I think that this kind of is coming, Okay, I said it last week. It's more of a political game. It seems like that. It seems like, here you go. You can have your cut because you keep on pressuring me to, to cut, although I don't want to. But okay, we'll change our rhetoric right now. We'll say that, you know what, we're not really focused on inflation that much at this point. We're focused more on the labor market, and that's why we're going to go for that cut. So it seems like this is how the rhetoric changed, and now it's very interesting to watch the whole kind of financial world. How all the news outlets out there, how they were initially saying, oh, we need, why the Fed is not going for a cut. They need to go for a cut. How much longer they need to wait, how much more data that they need to be dependent on. And now when we are expecting a cut, now everybody's changing their tone, saying that, oh, why the Fed is not actually looking into inflation, because inflation is important, because it's going crazy. We might go into stagflation. So that's the issue. It's like very politically driven. Everything is very politically driven, and certainly that's what we're noticing right now. And of course, we'll see. We'll see what these next steps will be. But I think that, yes, the September rate decision is kind of a done deal now. I think it's going to be the rate cut that we're going to get. Certainly, there will be pressures on the Fed. Why the hell you're not looking at inflation? It's going crazy, or it might go crazy. But the Fed will have to say, but okay, we're worried now about the labor market. For everybody, that's not going to be enough. That's not going to be good enough. But then when everything will shift back towards inflation, when they will stop cutting rates, for example, because of higher inflation, everybody will start pouring kind of crap on the Fed, saying that, oh, you know what, why are you not kind of considering the labor market, which is in difficulty, and that's why we need cheaper lending. So that should be the main focus. Anyway, you can never please everybody, unfortunately. And unfortunately, every time the Fed will come under scrutiny. Look, I don't want to be like the defender of the Fed or anything. I don't. They do their. They have their screw ups as well. Everybody does. However, when everybody's kind of ganging up like this on unlogically, I then find it a little bit difficult, because whenever politics starts to get involved, straight away, that's it. You can throw economics out of the window. Anyway, coming back to the charts here. So look, after Friday's kind of crazy move to the downside in tech, especially, looking at Nasdaq here, look at this was the major blow here, because again, we know why, because these guys here, Nvidia sold off, AMD sold off. So look, eventually these companies will provide opportunity. I mean, I don't think that we're done with them. Yes, I think it's a nice little profit-taking moment here. Looking at AMD, if I look at the Fibonacci retracement, you'll see that we're perfectly near the 23.6. The question is, do we want to retrace a little bit more here towards the 38.2? Could be a nice one. Could be a nice, good opportunity for some shopping to be done around these levels, maybe. So let's keep an eye on that one. Nvidia as well, the same story. Looking at this, okay, this one still has some room towards the 23.6, so maybe it could align perfectly. For Nvidia, it's the 23.6. For AMD, it's the 38.2 on the Fibonacci retracement. But coming back to indices, look, am I getting bearish here very much? No, not really, not yet at least. I need to see a break of this upside line. I need to see a drop below the 45,000 mark on the cash index, on Dow Jones Industrial Average, and then we could consider a move lower. But let's not forget about the upside scenario, of course. If we do clear the current all-time high, ladies and gentlemen, 46,000 could be on the table, and maybe even higher areas. S&P 500 also good result here, but this is what I was talking about in my morning webinar, the Markets Talk. So basically, what we have here is a possible rising wedge pattern according to this one has been in place from around the beginning of August. So a possible rising wedge pattern, and again, if you know technical analysis, then you understand that such patterns tend to break to the downside. These are considered bearish indicators. But again, while we remain inside the pattern, it could still go higher. But if we do clear the lower side eventually, that's where it kind of works out nicely. Like I said, yes, Nasdaq here also resting nicely on this upside line. I need a clearance of that upside line in order to go lower, but again, there is still a chance for this one to rebound back up. I'll consider actually the upside scenario if we do push back above the 23,700, and then we'll go from there. Dollar index looking good here to the downside. I'm not a strong believer of the dollar strength right now, because let's face it, the current politics of the U.S. it's kind of in favor of cheaper dollar, because well, we need to make our exports more. They need to make their exports more attractive to the global community and make imports more expensive for the U.S. Companies. So how to say it? That's why they need a cheaper dollar. So of course, not very welcomed by the local population, the domestic consumer, because again, it's kind of reducing their buying power, especially when they go abroad, traveling abroad. But that's what that's how the economy goes right now. So it's very political. But again, looking at this technical picture here, yes, bearish triangle formation. We need a clearance of this 97.42 zone somewhere around here, and then we could go further south. Ladies and gentlemen, I'll have to wrap it up here. Thank you very much for watching, listening. I hope you found it useful. Thank you very much for watching, listening. Yes, as always, stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. And I shall see you in my next video update. Bye for now.